So let's pivot, if we could, to talk about, and this is our calls of the day. We have a few that I think are important enough to discuss with all of you and our viewers. Let's talk home builders. Obviously, we've been focused very heavily on the movement in interest rates, and the stocks in many of the builders have been down of late, whether it's, in the last couple of weeks, 3 months, 6 months, in anticipation of higher moving interest rates, and the fact of wondering how much stronger the housing market could be in terms of its growth moving forward. Well, Bank of America today has double upgraded. That means they've gone from underperform to buy in this case. Pulte Group and Toll Brothers, they raised Toll Brothers' price target to 63 from 61. Pulte target remains 58. Pete, you own D.R. Horton. You think home builder shares are way undervalued. How so in a world of higher interest rates?
Well, I think just based on how hard they really haven't really performed, right, Scott? I mean, when you look at it, the demand is there. They do have supply issues. They have supply constraints as they build. And obviously, they need to continue to acquire. But I still think going forward that this is an area that will still see the movement to the upside across the board, especially at the lower and the starter end of the building. So I think based upon that, I think these are way too cheap right now. And obviously, this upgrade today is sort of addressing the same thing. Even with interest rates going up, I don't know that we're going to slow down as much as maybe is being looked upon right now. I know it will slow it some, but I think the demand is still out there for folks that do want to get those single-family homes and move out into the suburbs and other places, Scott.
Now, the other stock I want to look at, and maybe it's a group of stocks, we can throw up Lockheed Martin, please, and some of the other defense stocks, because there was a call on that one, too, not surprisingly, given the conflict that we're all witnessing over in Ukraine. There's Lockheed shares, okay, up 4 1/3% today, upgraded by Wolf to outperform. Price target goes to 467. Pete, I know you own Lockheed. Jim, you own Raytheon. And I'll ask you your opinion first, Jim, in terms of, is now the time to be upgrading these stocks? They've had a nice move for obvious reasons. The question is, for somebody who thinks that all of this could be over in a couple of weeks, those were your words at the top of our program, why should I put new money to work in these stocks if some of that move has already happened and you think the worst of the conflict could be behind us in a couple of weeks?
Yeah, so you got to take the longer picture here, which is that, for about a year and a half, these stocks have underperformed. And it's been on the premise that with Democrats in charge, defense spending would be slashed. That hasn't turned out to be the case. And more to the point, with the events that we're seeing, not only in the U.S., but particularly in Europe, you're likely to see many years of increased defense spending. That's likely to be a semi-permanent change coming out of a short-term conflict. Now, I will say this, Scott, and this is important. With the moves these stocks are moving today, I wouldn't rush out and buy Lockheed Martin and Raytheon Technologies and Northrop Grumman today. I'd let things settle down for a couple of days, maybe even for a couple of weeks. But over the long term, these stocks are going to regain the mojo of outperformance that they had in the last decade, because defense spending just looks like it's going to go up across the world.
Okay, I'm glad you tempered your comments a bit with maybe not today or for the next couple of weeks. Obviously realizing, as I pointed out as well, the move that we've already seen in those stocks. Joe, you own Northrop Grumman. Why is that the pick of yours over perhaps some of these other names like Lockheed, which gets the call today, or Raytheon, which Jim owns and likes?
So I think all three of these names you could own, and I think all three of these names you could buy today. So I disagree with my good friend Jimmy. I don't think we talk about sentiment enough. Just think about sentiment last Thursday. I think the expression is oversold markets don't crash. In terms of institutional allocation to what Jim's talking about, the defense industry equity names over the last year, they were carried at a significant underweight. Very slowly, that underweight is being rebuilt towards market weight at best. We're not even at the point here from a sentiment and ownership perspective where you could begin to think about these names as an overweight. I mean, Scott, just think about it. How many times have we talked about defense stocks in the last 6 to 9 months on the show? I've been long Northrop Grumman. I've given it as my final trade multiple times, but it's not something where we're going to talk about on a daily basis like we are the ARC stocks or Apple or Microsoft. There's a lot more to go here in these stocks, and it's based on positioning and sentiment.
Okay, so Pete, you settle it then. I mean, you're the man who owns Lockheed. Joe says you can buy these today. Jim says I wouldn't buy them today, even though I like the space. Let things settle out a bit. What do you say?
I think you could pause, but I actually agree with Joe. I think you buy them. Take a look at what the PE is of Northrop Grumman. Take a look at what the PE is presently and the balance sheet of what we see out of like Lockheed Martin right now, Scott. And I think you're going to see demand continue. This is the trigger point for demand. That's why I think Wolf is seeing this as an opportunity, and they're looking at a stock. Even before today, the stock was doing just fine. Now it obviously hit new highs, but I think there are plenty of highs left for a name like this. Aeronautics is going to be an area that people are going to be coming after, and Jimmy knows about the F-35 and the 16 and all those kind of things, so he's well aware of all of this, and he knows as well. But I think the demand is there, and it's not just about today, though, Jim. It's not just about Ukraine. It's the people who are stepping back saying, you know what? Are we really in a position right now where we can be defensive or be aggressive if we want to be? The international side is what they're pointing out in this upgrade, and I think that's very important. The international demand is going to be there.
All right.
Can I make one last comment?
We're going to take a quick break. Just be real quick, Jim, please.
In 1990, I bought Raytheon Technologies. 1990, when the Gulf War I started, because the Patriot missiles started flying. When everybody saw that, it was already in the stock. So, that's a memory that sticks with me, and it's why I say don't buy today. But wait a week or two, you got to get into these stocks.